Monte from Plano, Texas asks, I noticed in a recent article that the value of payments using the Yuan increased 171% from 2012 to 2013, according to a press release by SWIFT. In light of the Fed's dollar debasing, would the rise in Yuan exchange presage the decoupling of the Chinese and other economies from the U.S. economy?
Well, certainly. I think one of the reasons that you're seeing more transactions invoiced in other currencies is because the dollar is losing that status. It hasn't lost it yet, but certainly its grip is getting more tenuous by the day. The transactions that you're looking at are transactions involving China and other nations where they're trading in the yuan as opposed to the dollar. It's not that you have two non-Chinese companies trading with each other in the yuan, but when the transactions involve China as one of the counterparties, you are seeing a greater move. And this is happening with a lot of the emerging market nations, Russia, Brazil, India. As they trade bilaterally with each other, they're increasingly moving away from dollars into their own currencies. And yes, that is going to work against the dollar, but ultimately that's not what's going to bring the dollar down. I think these transactions are moving away from the dollar is a reflection of that inevitability and the world trying to prepare for it. What's ultimately going to crash the dollar and cause the dollar to lose its reserve currency status is our own inept monetary and fiscal policy. The dollar is not going to be destroyed from China. It's going to be destroyed from the United States. Now, it's true that China and a lot of other countries are propping it up right now. In fact, the only thing that's standing between the dollar and oblivion are countries like China that are foolishly buying up our dollars. But at some point, our ability to supply dollars is going to overwhelm their ability or their initiative or their desire to prop the dollar up, and the dollar will collapse. And of course, by changing these arrangements now, China and other countries are simply preparing for the inevitable.
Carlos in San Antonio, Puerto Rico asks, I'm concerned about a rental property I have. It has paid for itself for the last 12 years, but after discovering your videos, I'm wondering if I should continue to hang on to it. I calculate that I can make $50,000 if I sell it now. Would you keep renting it out or sell it and put that money in gold or foreign stocks, etc.? I'm afraid things will get bad enough where I will not be able to rent it or pay for it and lose it to the bank after all these years.
Yeah, well, in order to really give you a good answer, I would need to know a lot more about the property, where it's located. You said you live in Puerto Rico. I'm assuming the rental property may be in Puerto Rico, although maybe it's not. But, I do think that the economic fortunes of Puerto Rico may be improving. I myself am in the process of moving one of my businesses from California to Puerto Rico, and I will probably move there myself within the next year or two, and so might a lot of other people who are trying to take advantage of the now more favorable tax treatment that we get in Puerto Rico, and trying to run away from the escalating tax burden that we face here on the mainland. So that might bode well for Puerto Rican real estate in general, although I'm not really familiar with the Puerto Rican real estate market right now, so I don't really know what it's priced for at the moment. I know that there's some tough economic times in Puerto Rico. There is a lot of unemployment there. There's crime there. That's one of the reasons that Puerto Rico has embraced this new low tax regime for businessmen who want to relocate there from the mainland. But if more people come to the same conclusion that I have, and you get an influx of entrepreneurs and businesses coming down to Puerto Rico, that's probably going to increase the demand for housing, rental housing. I'm not 100% familiar with the property that you own, so it's hard for me to know. But, in general, I think real estate is overpriced in the United States. I think it's being propped up by artificially low interest rates that are unsustainable. When the interest rates rise, just like bond prices, real estate prices will come down. The only thing that keeps them from going down is massive inflation, where the Federal Reserve tries to prevent rates from rising by printing even more money. in which case nominal real estate prices don't collapse. They may very well rise, but the problem is the price of everything else will rise much faster, including the price of gold and silver, which you also mentioned. Part of the answer to your question might lie in the leverage inherent in the transaction, how much debt you have, what the terms are related to that debt, and how secure the cash flow is, how secure the income streams are to help you service that debt. So I can't give you a cut and dry answer. So you'll have to do a little thinking on your own, but keep listening to the radio show. And I talk about this topic in generalities all the time. And if you do end up with some cash to invest, if you want to go to gold and silver, make sure and call Euro Pacific Precious Metals, or if you want to go into dividend-paying stocks or bonds, talk to my representatives at Euro Pacific Capital, and maybe I'll run into you in Puerto Rico one day.
Billy in Glendora, California asks, I am on disability and I'm going to retire soon with 100K saved up in my retirement fund. I have a large position on metals already. How else can I secure my wealth as I retire into this frightening economy?
Well, then maybe you don't need more metals. I can't give you specific investment recommendations because security rules and regulations prohibit me from doing so in this forum. I am a licensed broker and money manager, but fortunately, you can ask your question off the air by calling one of my representatives at Euro Pacific Capital. You go to europac.net is our website. The 800 number is 800-727-7922. Just in general, what I recommend to people is, in addition to having exposure to precious metals, that they also try to protect their purchasing power by owning income-producing, non-US dollar-based assets. My investments of choice are generally equities. We deal with both foreign bonds and foreign stocks, but I think foreign stocks will offer a better inflation hedge and a better income stream, both in the short term because stock yields, at least the stocks we're buying, are quite a bit higher than the bond yields that we're able to get. But I also think the risk is worth taking because I think central banks around the world are too loose, which means I think bonds are overpriced and there's too much inflation. So I think you need to protect purchasing power, and I think dividend-paying foreign stocks are a great way to go. And we have managed accounts that we offer, which I think is the best way to go about it, as well as some wrap accounts. My advice would be to contact a Euro Pacific Capital broker and go over your particular circumstances so we can find out what the most suitable investment option is or alternative. And once my representative really can assess your suitability, ask you all the pertinent questions, then we can recommend a course of action, and hopefully we can work together through Euro Pacific Capital. So again, thank you for the call. I apologize again that I can't be more forthright and just make specific recommendations, but I think you're going to be better served anyway because you're going to get a more tailored investment portfolio when you go one-on-one with one of my brokers. So rather than just buying a suit off the rack, they'll be able to take your measurements and give you exactly what you're looking for. So, and I look forward to having you as a client.
Robert in Charlotte, North Carolina asks, I'm trying to understand currency devaluation by central banks. If weakening one's currency encourages exports, why aren't we exporting more? Obviously, we are weakening the dollar, but we aren't exporting more. Isn't this why countries devalue?
Well, it might be the excuse that they give, but it doesn't work. You don't devalue your way to exports. I mean, the only thing that happens when you devalue your currency is it's like you're putting your exports on sale. Your products are on sale, so you may sell more of them, but you're going to get less money. And so you're not necessarily better off. In fact, you're worse off. Any business owner, if he has the choice between selling his products at full price or having to mark them down, you'd rather be able to get full price. You only mark them down when you can't sell them. But if you have to sell stuff at 50% off, you may sell more stuff, but if you don't sell twice as much stuff, you're not going to actually have more revenue. and of course your profitability can go down. So it doesn't work. I mean, if you look historically, it's the countries that have strengthening currencies that enjoy growing exports, not the reverse. When America had a strong currency, we enjoyed large trade surpluses. We now have a weak currency and we have to endure trade deficits. Although in the short run, we don't actually endure the deficits, we actually benefit from them because we get to live beyond our means. But of course, in the end, we're going to get a big bill that we can't afford when the chickens come home to roost, and then we have a real date with destiny. We're going to be in for a huge drop in our standard of living. In the meantime, our standard of living is falling as we're losing all the jobs that used to be associated with producing the things that we now import. But eventually, the people who have been benefiting from all those cheap imports are going to suffer too when the value of the dollar collapses. You see, when economists or politicians simply talk about more exports, they don't even understand why we export. They kind of have the cart before the horse, or they look at exporting as an ends. Exporting is not an ends any more than a job is an ends. A job is a means to buy the things that you really want. You don't really want your job. You want the things that you can buy with your paycheck. Well, the same thing with exports. You don't really want to export because when you export, you have to work, right? You have to use land and labor and capital to produce stuff, and then you export it. Somebody else gets to enjoy it. Somebody else consumes the fruits of your labor. So you don't really want to export. You want to import. There are products that are made in other countries that you want, but you have to figure out how to pay for them. And the way you pay for them is by exports. So exporting is simply a means to finance our imports. The less we have to export to import, the better, because that means we don't have to work as hard to buy the things that we want. But when you debase your currency, you achieve the opposite of that. You end up having to work more, you have to export more stuff and import less because you have to pay more for everything you want and you get less for everything that you have. So you're selling your stuff for less and you're paying more to buy the other stuff. So it always backfires. So when countries debase their currency, their people get poorer.
Chino in Miami, Florida asks, right now I have a private banking account in Santander Bank, but unfortunately in the short term I can't change it to Euro Pacific Bank, so I've been asking my financial advisor to add Euro Pacific Bank funds to my portfolio and it's been great. What is your opinion of buying gold through Central Fund of Canada? Also, how can I buy Euro Pacific Precious Metals, bullion, gold, and silver through my Santander account?
Okay, a couple of questions. One, I can't give specific stock recommendations with respect to whether or not you should or should not buy Central Fund of Canada. But it is a gold trust. They own gold. It's a closed-end fund. So if you are going to buy that fund, it's always a good idea to buy it when it's trading at a discount to its NAV, because then you can buy gold for less than it's actually worth. Sometimes it's trading at a premium, and sometimes the premium can get quite high. I know very recently in the big gold sell-off, it did trade down to a discount. So if you're going to buy it, check the premium versus discount, and it's certainly more attractive if you can buy it at a discount or kind of at fair value than if you have to pay a premium. There are also some tax advantages for Americans because unlike bullion, which is subject to the 28% tax, the Central Fund of Canada is subject to a lower capital gains tax, although the difference is not as big anymore now that they stuck the Obamacare tax on there, so that's 24%. But if you earn less money, it's possible that you could qualify for a lower capital gains tax. As far as your ability to buy Euro Pacific Precious Metals from offshore, have your offshore bank, Banco Santander, contact Euro Pacific Bank, because Euro Pacific Bank also sells physical precious metals, and we can deliver it to your account there. And they can contact the bank. We have a precious metals division within Euro Pacific Bank. So while you cannot have a bank account with me as a U.S. citizen, you certainly can purchase a gold or silver through me, or rather your offshore bank can contact and purchase gold and silver, because there you're not opening up a bank account. Your bank is simply buying gold and we're shipping it out to the bank to hold it. As long as I'm talking about my bank, Euro Pacific Bank, I might as well throw this out there. Business is really picking up at the bank. Demand is picking up. The people who are working there are already overworked. In fact, all of the brokers that we hired that work at the bank came to us through listening to the Peter Schiff Show. Everybody that we hired, all the brokers at Euro Pacific Bank, were people who were listening to the Peter Schiff Show. I basically put out the word that we needed to hire people, and we got lots of resumes. We interviewed people, and we hired, I think, half a dozen guys. And now they need some help. We need some assistance. So I'm going to put the call out there again. We actually need to hire 4 junior brokers or broker trainees. And we've actually kind of come up with our own training program to help train people now to become full brokers after the training period is over. So what we'd like to do is, if you're interested in becoming a banker at Euro Pacific Bank, I'd love to hear from you, get a resume from you. I'd like to have people that are not now living in the United States. I know we have some people working for us now who are Americans and relocated, but we really need to hire some people right away. And I don't really have the time to go through the relocation process, because in order to work for the bank, you can't live in the United States. You can be an American citizen and be an employee, but you can't do the work from the United States. So you've got to be outside. So if you're an American citizen living abroad, or if you're not an American citizen and you're living anywhere outside the United States, if you're interested in working for me, specifically at my bank, Euro Pacific Bank, and if you want to check out our website, just go to europacbank.com. Send a resume in to, I guess, the Peter Schiff Show, or any way you can reach me at Europac Bank, and I will forward it to the right people. And we need to hire 4 people. So, plenty of opportunity. It's definitely a plus if you can speak a foreign language. And I'm assuming that if you're living outside the United States, you do speak a foreign language. The more you speak, the better. Also, to be knowledgeable. Some sales experience is also a help. So whatever, if you're looking for the opportunities, you're going to have to work hard for a while. You might not make a lot of money for the first 3 to 6 months. In fact, you'll make very little money. But if you stick it out, you keep on working, you'll probably make a lot of money a year from now, and a lot more money 2 or 3 years from now. So you got to start from the ground up. You got to pay your dues. You just need an opportunity, and I'm going to give that opportunity to the right people.